Hey, what's going on, guys? Welcome to the Black Financial Channel. I'm Dr. Boyce Watkins, and I wanted to give you a quick overview of what's going on with Disney stock. Now, before we move forward, hit the thumbs up button, hit the subscribe button, also hit that notification bell. Let me break this down for you. You may own Disney stock. You may have seen that your Disney stock took a big jump today. From what I'm seeing here, it looks like it jumped a little bit less than 5% in after-hours trading. Sorry, a little bit more than 5%. And it appears that what's driving the revenue growth in Disney stock is that it had a really good summer in terms of movie releases. The Lion King and Toy Story 4 did incredibly well. Their earnings, or their revenue and earnings actually for this quarter exceeded expectations. Now, what's fascinating about Disney, though, which is interesting in terms of its content, is that it's kind of fighting almost conflicting battles right now. One is that it's obviously making the movies that it's putting out in theaters, but it's also trying to benefit financially from people that stay home from the theater, right? So some would either see this as a good diversification strategy or maybe cannibalization, right? Where you're now encouraging people to stay home to see your movies instead of actually getting people to come out to the theater. And so basically, the reason that Disney's profits actually dropped by half this quarter is because they're making a long-term play. They're putting a lot of their money into Disney Plus. Disney Plus is eating up a lot of their operating profit right now, and you're seeing that this massive expenditure on Disney Plus to occupy territory previously controlled by Netflix is going to lead to a massive streaming war. And Disney has pretty much made a statement to make it clear that they're ready to lose money for 4 straight years, like billions of dollars a year for 4 years, in order to get this territory. They've also been buying big franchises. They bought the Avengers, Star Wars, things like that. Basically, Bob Iger, the CEO, he says, "We're making a huge statement about the future of media and entertainment." Highlighting the company's dueling priorities, Disney's theatrical movie division posted a 52% rise in revenue and a 79% jump in operating income. Overall, however, Disney's profits slumped by more than half to 1.05 billion, hurt by a sharp rise in the cost stemming in part from Disney Plus production costs. But its shares rose in after-hours tradings as the earnings beat analyst expectations. A team of newly hired engineers have built out an interface and technical underpinning to withstand millions of subscribers. Former partners like Amazon Inc. are now streaming rivals. So they've taken a lot of their former partners and made them into rivals, forcing Disney to negotiate deals that get its service onto as many platforms as possible. There's more here. There's also they have Disney Plus in addition to ESPN's streaming service, as well as Hulu. So they're putting a lot of money into this stuff. So Hulu's the third service that Disney now controls after its $71.3 billion acquisition of 21st Century Fox entertainment assets. Disney's preparing a trio of streaming services to appeal to more than its core family demographic, and no deal was more instrumental to the strategy than its absorption of Fox. The integration of those assets continued on Thursday when Mr. Iger announced that Fox's FX network will begin producing programming for Hulu. Hulu will become the service where Disney sends its more mature shows and movies. Episodes from the original FX shows will be available on Hulu one day after they premiere, including new shows from Ex Machina, director Alex Garland, etc. The ESPN streaming service, which was very profitable, by the way, and Hulu will be sold as a bundled collection for $12.99 a month. So pretty soon you'll be able to get ESPN and Hulu together for $12.99. So it seems that Disney seems to be borrowing elements of Netflix's playbooks for Disney Plus. The service will allow users to download shows and movies for later viewing and add multiple user accounts to be permitted for each household subscription. But Disney is also diverging in significant ways. All Disney Plus programming will be family friendly, and episodes will premiere one at a time, more akin to traditional broadcast or cable television than to Netflix's binge it all approach. Mr. Iger also has said he wants Disney to have a user interface that feels more personally tailored than Netflix's algorithm-driven model. Insiders expect Disney Plus to siphon some users from Netflix, whose most popular service offering goes for $12.99, which is twice as much as Disney Plus. Netflix in October missed its subscriber growth target in the U.S. and overseas for a second consecutive quarter. Netflix also lost domestic subscribers for the first time in nearly a decade 2 quarters ago. And in its latest quarter, it added 517,000 subscribers in the U.S., short of its expectation of 800,000. So it sounds like Netflix is really, having to go against the wind. They're swimming upstream a little bit because they've got more competition. I personally think that the streaming wars are just going to lead to more people. It's going to lead to a bigger pie, but I do think that there are going to be some losers because there's so many streaming services out here. There's no way a person could want all of them. And when you have some that are super specialized, I'm really curious as to how that competes against more generalized streaming services. business? I do not know the answer to that question, but I do know that I own a lot of Disney stock. I plan to keep my ownership, and I plan to continue to acquire even if the price drops, because I believe Disney is a long-term solid play. In terms of investing, it's a very solid company, very well run, very well diversified. They know their stuff, and I think that when they come into a market, they're going to fight for territory. So my assessment on Disney is I see Disney as a hold. I don't know if I see it as a buy per se, but then again, though, if there was a decline in the market price at some point, I probably would buy some. I'm not telling you to buy it. I'm just saying that's what I might do. Depends on what the future holds. Okay, guys. So anyway, I'm out of here. Do me a favor, hit the thumbs up button, share, and subscribe button. Also, if you're watching in the month of November, you'll know that at the end of this month, we're doing a special lecture on how to form the perfect estate plan. I've got attorney Nicole Compton from the Black Business School, who is going to come in and answer all of your questions and help you get the perfect steps to make sure that you can set up the perfect legacy plan to transfer your wealth to your children once you graduate from life and move to the afterlife. A lot of wealth is lost that way, so we want to make sure you're prepared. So if you're interested in checking out that seminar as well as others, go to drboyceseminars.com. That's drboyceseminars.com. Hit the like button, share button, and subscribe button. If you haven't hit the thumbs up button, please hit that. Not thumbs up. The thumbs up and the notification bell. We'd love your support on the Black Financial Channel. We're trying to reach as many people as possible. So thank you, guys. This is brought to you by theblackbusinessschool.com. So if you have any educational needs for your family, go to theblackbusinessschool.com. We're gone, guys. Have a good day. I'll see you soon.